I'm actually going to start from the end part. I joke that Pat and Joe gave me the easy part because, you know, they've said all this hard stuff, all this complex stuff to think about, all these challenges, but impairment in Bitwave is done at the click of a button. Now, there's a bunch of massive, let's call it engineering capital and like accounting capital behind making that happen. But realistically, just to do it, it ends up being a click of a button. So I'm going to start, you know, at the end, and then I'll peel back into the complexities of what's going into it just to show you that piece. So I'm going in the middle a little bit just for to show. So it is literally based on, for example, in this case, I've got a start date, I've got the end date. I will go into more detail on tax strategy and all of that. I've got some kind of inventory relief methodology that I'm using, and I am there's some information about am I capitalizing fees or not, and I am calculating impairment. The click of a button part is literally I am going to click this button, and it's going to run through the processes on the transactions and eventually give me an impairment expense. Now, that was easy, true. There's a bunch of setup and kind of like implementation things that go into that to get you to this point. So that would maybe be my first point is, yes, you can do it at a click of a button in Bitwave, and it'll give you your impairment expense and the required reports here. So there's a actions report, which I'll download. There's a gain loss report, which I'll download and pull up and show later. That gives you lot by lot information, but you know, starting at the end here to come back to the beginning. Click a button, run it. It gives you the numbers, and then there's lots of detail around it. But let me dial back a little bit to talk about kind of what goes into it, and then we'll drill in here. So the first thing I'm going to do is take you to transactions. So ultimately, in this sort of demo instance that we have, we connected a wallet. So for those who are, I know a lot of people are familiar with this, but from a Bitwave perspective, you can literally in a matter of minutes plug in your Ethereum wallet or whatever wallets that you use, and we pull in the transactions that are associated with that wallet with the balances appropriately represented. So that's the step one that goes into the journey of impairment. So in this mocked up instance, we have about 6 transactions. For those who are familiar with Bitwave, you will know that when it's green like this, you see these are deposits coming into the wallet and coming into your inventory versus reds, which are things going out. So in this case, if I'm starting from the bottom, on May 19th, there was a deposit of 0.05 ETH, another deposit on different days, going to, these are about 5 deposits. And eventually it looks like, and this is something kind of pretty unique, right? Is there's this action of, it looks like some link coming in and some ETH going out and some ETH going out. Effectively, that is something that's pretty much auto-identified by Bitwave as a trade. So it looks like the owner of this wallet essentially, after depositing a bunch of ETH into the wallet, effectively just did a trade of ETH to link and had a fee associated with it. Now, there is a lot of thinking that Bitwave is doing to put those things together intelligently. That's a discussion for a different webinar, but just giving you a feel of the transaction. So relatively simple, 6 transactions that have happened, deposits and a trade. That's your starting point. Now, all of these are, we talked about pricing earlier. All of these are priced, again, based on a defined pricing source. So you will have a pricing, probably a memo that says this is our pricing source. And from a Bitwave perspective, we connect to the appropriate pricing source. Again, lots of discussion for another webinar, but here are your transactions. Now, let's go to the journey to sort of impairment. So going to the tax center, so I kind of started from the end previously. The first thing that I think I want to highlight about this is something Joe mentioned earlier, which is we actually are not forcing you into a tax strategy or inventory relief strategy, right? We we have a variety of them. So first in, first out, last in, first out, cost averaging, spec ID of different kinds and levels, and we'll show for your inventory relief. And one of the unique things, and we've seen clients use this quite a bit, is you could actually kind of like pick, you know, say I'm a first in, first out kind of strategy shop and do all of that for a whole year. And you could actually decide to run as a scenario. What would it all look like if I did last in, first out at the click of a button? So we've actually seen clients do that. I know, you know, from maybe from a pure CPA or a Joe's perspective, you're not necessarily trying to flip every month to say last in, first out this month, first in, first out next month, or that sort of thing. But we've seen clients use this as a scenario thing to actually say, hey, what would it have looked at in that other scenario? Kind of a little bit of what Joe did on the spreadsheet, you can actually do in system at the click of a button for analysis purposes, or if it's even for decision purposes. So running in here, I know that those transactions were in May, and I kind of know the date, so I'm just gonna narrow in on the time period of that those transactions happened. I'm going to plug those in here. I think it ended on the 23rd, but I'll go a little bit further because it'll give you a chance to see impairments actually after those dates. Now, again, I'm picking my sort of inventory or disposal relief strategy here, which is in this case, first in, first out. I will show, because specific identification is something that you can configure separately, I'll give you a glimpse into that. So I click that, I select that, I'm going to run the scenario. While that is going, I'm going to take you somewhere else just to show you here. So there is configurability. If you were using Spec ID, right, there is a tremendous amount of configurability here. So if you think about what this is doing here, I can select here, I'm saying I'm doing a short-term loss, I'm maximizing my loss, or you could say I'm going to minimize it, long-term loss, or you can flip any of these where, you know, actually it's actually a short-term gain, minimize, maximize, you know, coming up with a very unique strategy. And there's actually deeper strategies that you can do beneath this. So if you were doing Spec ID, there's probably a whole webinar on discussing this and applying this strategy, but just want to show you the configuration behind if you decided to do Spec ID here, if your selection was here, which I didn't select. So this is first in, first out. I ran it. It told me, here's my impairment expense. It also told me my realized short-term gain and unrealized as well. The transactions are here, but I'm actually going to jump into, I'm going to download the actions report, which will show lot by lot activity. So we can kind of like spend a little bit of time looking at that. So downloading those. I'm going to pause here real quick. And all right. So actions report. So Joe kind of showed this earlier in the presentation. There are a number of things to notice here. Obviously, the timestamp of the transaction, obviously every single action. So if you had, I don't know, 200,000 transactions, all of those transactions would be represented here. There's an event happening with each of those transactions. So are you acquiring the asset? Are you disposing of the asset? And then there's these unique things here called that obviously are the impairment actions. So let's take an example. So in our instance, if you remember when we looked at it, we had about 6 acquisitions. This was the first of them that happened on 5/19. That was the acquisition. There was another acquisition on 5/20, and that's the event. These are transaction IDs representing that event. Now,
the event ID would be like the blockchain ID where a transaction happened. So the trades are, that's the blockchain ID of that trade is. If it was an exchange trade, it would be so it's the event ID is separate from like the lot ID or the inventory ID that we sort of track.
Great call out, Pat. So going to the lot ID, in this case, you can see that the lot ID is, it seems like it, but it's different. So when this event happened, we manufactured or created a new lot for this. Now, there was a second event of another acquisition, which is a new lot. Now, there's some details over here that I'll go through real quickly is, That first lot was an acquisition of 0.05 ETH at the exchange rate at that time was 1,990, which meant the carrying value was this amount. So that's just this times this. Now, the second lot, though, was at a different time, which effectively gave you a different exchange rate and therefore a different carrying value. Now, here's the first time you see an impairment action. So I'll make a comment here. So you see that there was this environment was configured to do daily impairment, impairing to the daily low price. Again, there's a lot of configurability to that. In terms of using, daily close, daily, whatever it is that you want to use, this environment is specifically configured in this way. And so the first impairment action, interestingly, happens on 520, because in fact, if the price on 519, right, is not actually lower than the 1990, there is no impairment action for that day. So the first day that there's an impairment action is on 520, and you can see at 11:59:59 is the 11 right before the end of the days when the impairment action is happening, and effectively the low price of that day was 1956.88. And so we have two lots that exist today, and we need to impair both lots, right? So that's that first lot. You can see that those two match, and that's that second lot. And what we're doing here is saying, this is the new price that we should use, which is obviously the same. This is now the carrying value, and the impairment expense is here. What you would expect, which you'll see, is the sum of this and the impairment expense is 99.54, which matches that carrying value, right? Because we're impairing with this impairment expense, impairing down that carrying value to this, right? And then same here, if you look at this, that is effectively 98.8, which was the carrying value here. So this is your impairment expense. This entire column, right? The sum of this entire column is the impairment expense for that period. Going further, there's a number of other activities that happen. So a few more buys on the 23rd, and then all the disposals. I think something to highlight here is, again, if you think about, we chose a first in, first out strategy. So this first disposal right here, that's the transaction, we would expect to dispose from the first lot, and it does, right? So if you look at the lot that's being affected here, right there, that is because of a first in, first out strategy. We're actually disposing first that lot up here, 0.05, and the price is different. We calculate the fair market value at this moment, and then you have a short-term gain in this case, because the fair market value is 102.93, and then when you take away the carrying value, you're going to get the 5.08. So again,
or I'm going to jump in because I want to make sure we leave a little bit of time for Q&A at the end of this, but hopefully this kind of shows off how this is a good model for, this is like what our impairment report looks like. It's a good model in general for how you want to be thinking about this, because you are doing lot by lot level impairment. You want to see actions on a relatively regular cadence that follow the impairment. This gives you full visibility into all that data. Like having a report like this, whether you're producing it or your auditor is or whoever, gives you a lot of defensibility. Like that report, we've handed a version of that report with millions of lines over to Big Four auditors to do full audits of all of the data. It helps them a lot because they can both do audits of the pricing, because from that you can actually do price auditing, but then audits of the acquisitions, you can do blockchain level pricing, all that kind of stuff. So really, really good. Thank you, Ore.